All right. Thank you for the request, Mike. 38.2 fib level can be a part of a chop zone. So any fib level can be a part of a chop zone, TLC. In my experience, especially in day trading, when we are in choppy conditions, prices often trade between the 50 and the 618 of both ranges, measuring the low to high, and look for the 50 and the 618 to be support, and high to low, look for the 50 and the 618 to be resistance. I'll show you, because this morning we were very choppy. We had a moment or about an hour of chop on SPX, and I'll show you what I'm talking about. You see it right in here. This was pretty choppy price action there. So what I want to show you is this. What I would do when price is choppy like this is what I like to do is have Fibonacci's ran from high to low, right? And low to high. So I'm only keeping the Fibonacci levels there. And then on the opposite direction, and the closer these levels are together, guess what? The more intense the chop is. Okay, it's going to look like that. So, with that being said, look at how extremely stuck price was between right around 77.55 to 60. Drawing these Fibonacci's, that makes perfect sense. Absolute perfect sense to me, because the 60 is the 618 of this morning's down move. And we just couldn't get going up and above there. This is what we call the imposter level, and it kept price down all morning. And we chopped between this range for quite some time. Okay. Now, once you identify that the market is chopping, and you just draw you a box around that chop. You can draw these Fibonacci's on and do what I just did. But what I want you to do is find that box. And then, regardless of the Fibonacci level TLC of 38.2, I want you to identify that chop zone. And then I want you to ask yourself, do I want to trade chop today, or do I want to sit on my hands? And if the answer is you want to trade the chop, then my suggestion is to be a buyer at the lower end of this chop and be a seller at the upper end of this chop. Then, if your answer is no, I want to set on my hands until something, either bulls or bears, prove themselves, then you sit on your hands until you get the break of one side of the chop or the other. In this case today, we got the break of the downside of the chop. So once price broke down below this side, I want you to look at what price action did. Right? You see it? Boom. Okay. So that's how I treat chop. First, I run fibs in both directions. I look at candlestick structure and those Fibonacci levels. I don't draw this gray box around it, but if I was brand new to trade and chop, I would. All right. And then I pick a level that I'm going to call the bottom of chop. You can use a moving average on my chart. This is a 15-minute 8 EMA. And you can use that as, the place where buyers were stepping up. If you're okay with the risk of about 2 points, trade that end of chop. Give yourself 2 points of risk right there, right? And then as far as the upper end of chop, you would do the same thing. Find your risk tolerance, a couple of points, mark it out, and just trade back and forth here or sit on your hands till one side or the other breaks. Okay. GC Ant, I believe that's the next one. You got it.